I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi, everyone. I'm Jason Balara, and this is the Know Your Why podcast. Today, I'm here with Mathew Owens. Mathew is a CPA. He's flipped over 1,000 houses and has lent $35 million to flippers across the U.S. So I'm actually, first of all, thank you, Mathew, for coming on the podcast. I'm really excited, and I appreciate your coming and giving us your time. I'm super excited to kind of get into this because I actually haven't had a lot of people on the show that have been in the flipping space. Mm-hmm. So it'll be great to kind of get your expertise. But let's just start. Maybe give us your background, a little bit about yourself, and kind of how you got into real estate.
Yeah, no problem. It's the fun fluctuations of real estate that got me here. So I quit my CPA firm job in 2006, just kind of banging my head against a computer going, I can't do tax and audit anymore. And I took some real estate classes that I spent like 16 grand on, of course, just like everybody does, or at least at that time, and I ended up getting my first deal under contract and quit my CPA firm job. Just was like, I'm done. I can't do this anymore. My mind was gone. And, thinking, I'll have time to go to the gym. No problem, but realizing you're working 14-hour days in the beginning to grind and really push and get this thing going. Right. And so I quit my CPA firm job in 2006 and then was real estate genius for about a year and a half before I got my ass handed to me and punched in the face by the real estate market crash of 2008. Yeah. I thought I was, my ego was, hey, I have a 790 credit score and, my books are done. So as a CPA, I thought that, hey, I must be doing good as a business if my books are done. Right. But the things you don't know about running a business, you're kind of normally at that stage, you're more of a technician than anything else, right? And versus a true entrepreneur or a business owner at that point that has that multiple hat scenario. But since then, after the crash happened, I grinded and kept going at it. Went and had an office at home for a long time, and basically went through and started flipping and doing joint ventures and different strategies with investors. And I took out 290 grand or 200 grand on my credit cards to make sure my investors got paid back during the crash, and hunkered down, tried to make it float, and ended up losing everything when that happened. But after that happened, my investors were obviously appreciative and saw what I did for them 6 months later after they realized the market really did crash, Right. But we ended up, that kind of catapulted us into being able to now flip. Now it's actually over 1,500 houses. I just say 1,000 because I stopped counting, but right. We also, in addition to that led us to, through our networking and relationships, through our nonprofit that we teach. We have a nonprofit that we teach financial education and real estate education called For Investors by Investors here based in Southern California. And through that, we developed all the relationships we need for our business, which is a lot of capital sources, a lot of operators, a lot of, resources, which is what real estate's all about, right? Is those resources. And so we started being able to raise more capital and then lend that capital out to flippers in different markets around the country. And now we're at over 35 million lent out to flippers in different markets. And it's actually one of our primary businesses. We've slowed down quite a bit, from flipping 5 to 10 houses a month consistently, down to 1 to 2 a month right now. And even I think the last few months we stopped for the minute because interest rates are rising, and just trying to get a gauge for the market and be careful and make sure that we clean off our plate from the 50 flips we have going, or 50 flips and holds all at the same time, And so, we started lending capital, and now we do this lending to different flippers and do joint ventures on those flips and holds with different investors all across the country. And we kind of did the same thing on the multifamily side, where we're going out and doing a couple of value add multifamilies on an annual basis, usually heavy construction type stuff, where we can really make the, equity, the built-in equity, work right by getting a major value add there and getting that forced appreciation in place. And then we raised a lot of capital from investors in Japan and China and here in the US for our debt fund that we have that we lend the capital out of. And then we also invest in a lot of outside syndications. There's a place for your active investments, which is important to do as an operator and know that how to be a technician on the operation side of real estate. Sure. So that it makes you a better passive investor too, which super important to have that passive investment aspect where we invest in other multifamilies, self-storage, mobile home parks, marijuana related deals, other debt deals, and all types of different stuff where I diversify my portfolio into different asset classes, different markets of the country, and different operators so that I can have a truly diversified portfolio. So if somebody goes to Mexico on me, then, some operator, they bounce on me to another country or something, that I'm not significantly financially harmed by that one operator. So I love that strategy. And so I do that a lot inside my own 401k, inside or outside my 401k as well. And, from the tax side of things, we kind of made a name for ourselves by being able to help people strategize on that side because I'm a CPA, and being able to literally line up properties for people's 1031 exchanges, help them front load tax benefits through cost segregation studies and things like that on different assets that we can provide, and providing truly turnkey, assets to investors that just want to be passive. And we go through and be the operations partner and structure it for tax purposes for them, and structures like that to be able to really make their investments pop. So you can tell I like doing this stuff. My wife doesn't let me talk about real estate anymore. So she's like, stop it. That's enough.
Oh, yeah. I'm sure that probably gets old to her if she's not, sort of in the space. My wife feels the same. She's like, I think, sick of me talking about it. But you get, once you kind of realize the power and you get passionate about it, right? So it's like, and you want to talk to everybody, and it's like, well, of course it's natural to talk to your family as well. So, yeah. I love that. I love the, and I will maybe come back to it, but you're talking about sort of how you've diversified your own portfolio, because I think that's a really great strategy that I do want to dive into more. But before we get there, maybe we'll just go sort of chronologically. So I think, coming from a background as a CPA, you've got, everybody has their, previous life skill that they bring into real estate. It seems like almost nobody just starts life as a real estate investor. They're like, I was doing some other thing, and then I came in this. And so, that obviously you have a strong background in sort of financial modeling and kind of how things are going to work from a tax standpoint, but even just looking at, profit and loss statements and balance sheets and understanding the financials of these real estate deals. And they look different depending on what asset class you're talking about, if you're flipping or you're investing in multifamily or whatever. But when you made that switch, that you first you started as a flipper. And so had you had any construction, anything, kind of along the lines of the operational side of things when you went into that?
So actually, no, I was completely green and made every mistake in the book. I like to say after flipping 1,000 houses, I've learned 1,000 ways to lose money on a house, so, and in reality, that's how it works until honestly, 10 years in, you find new things, the ways to lose money on things that, but really after a while, if it's a smaller chunk of money or something, you go through and, let those things kind of go off your shoulder. And it's a mental thing where you're like, no, focus, make more money. Let's go do more volume. There's going to be some losers across the board and focus on that aspect. But at the end of the day, you have to teach yourself through your own education of doing it, plus just talking to a lot of other asset managers and people that are in the space and networking with people with more experience to understand how they do their operations, and then document the process so that way it can be done correctly. Because I think a lot of people go through this and they don't document the process. They don't go through and, really outline the clear vision of what needs to be done to protect yourself on, the individual property level, on, the structure level as a whole, for example, on these syndication deals, on, a lot of different aspects of the flip or hold cycle that goes into that, from start to end on that process. So there's a ton of little things from the initial acquisition and the analysis of that piece, which we've developed because I'm a CPA, really awesome quick analysis spreadsheets where you can put in 5 numbers and if it's going to work or not for a flip for you or not, or a hold long-term for cash flow too. So there's strategies like that we've been able to develop to make things easier across the board for our team members, because some of this stuff takes some specialized knowledge, right? How do you analyze a property, but more importantly, how are you picking your comps in your area? Are you doing it like an appraiser is going to do it? What's it going to look like for financing? And if there's nothing available for financing, what are your additional options with that asset that you can utilize? Is there financing in place already? Can you seller finance the deal? Can you utilize private investor capital on that deal? Does it cash flow well enough to not need the back end financing associated with it? So there's little things like that on the beginning part when you're first starting to, find these deals, operate them, the operational flow of, hey, you got a lead in, you better get to that property immediately and get your rehab bid, get the contract ready, and better know every way that you can help that homeowner, because no matter what, whether you're, whatever you're buying, whether it's a property or a multifamily or another type of deal, if you can't help the seller with price or other options out there, you're not getting the deal. Simple as that, right? And so you got to be armed with ways to be able to help that seller, whether it's, hey, I got your relocation money. Oh, I can save your credit and catch you up on payments. And there's like a million little things that would help that homeowner out so that way they are more willing to work with you on that deal. And then it's the process. You get the lead, analyze the deal, get out there immediately, get the contract and the rehab bid right away, all handled at the same time with your documentation in place, as well, and making sure you're not forgetting anything on the rehab, including buffers. In this market with inflation, buffer like crazy, across the board, at least 15 to 20% on all your rehabs, because things are not what they cost 6 months ago,
Yeah. No, so, it seems to be changing like daily sometimes.
Yeah. So it's a matter of that operational piece, understanding, hey, what is the operation on the property acquisition side? What is also the operation on the renovation management side? And this goes into multifamily or any other asset class as well. What is your operation and your processes on the property management side and the operation side? And then also the capital side and the capital stack on the debt and raising money from investors. What's your structure look like and things like that? And being a CPA, I kind of became a specialist at that asset structuring side of things, where I've built these financial models. And so it helps to be able to now go into outside syndications and understand the numbers and the financial projections and the assumptions that are used to determine if, hey, is that comfortable for me? Did they use a 3% inflation rate on income and nowadays keep that same inflation rate for expenses, which really maybe it should be 10 to 15% for expense inflation now? Little intricacies like that you learn as an operator that kind of play into the review of another outside deal that you can invest in then.
Yeah. And for people listening to this, and take note of how you very casually just rattled off like almost everything you need to think about in flipping houses, in multifamily analysis. Like, I mean, you're just very, it's very clear that you've flipped over 1,500 houses. Like and so, but some of those things that you just kind of laid out there, like it was nothing. Like those are big deal items and sort of important things to look at, and very unlikely that someone's going to come in and be able to understand all of that off the bat. Right. You have a lot of years of experience. You started as a CPA. Like there's so people listening maybe need to just understand that you've got a very high level of experience and knowledge in the real estate space in general. And I think one of the things that I loved about your story is you said, when we had the crash in 2008, you went in and you made sure your investors were taken care of. And I am 100% sure that has hugely benefited you in terms of your success over the years since then, because anything you're doing in the real estate space, if you're raising capital from other people, like now your focus of what's the number one priority needs to become that. Right. And so all other decisions are based with that in mind.
Right. You're looking at where's that left hook going to come from again, and how do I protect my investors and structure these deals so that way they don't lose money. And I've taken multiple hits for my investors in the past, and it's just the right thing to do because I know how to make it back. I have a story about when I was about to lose 60 grand on a deal. Like it just basically wasn't working out on a multifamily. The deal was much bigger rehab than I thought it was on a 12-unit deal that I was buying that was older, and I should have known better. It was older type of property, and I, thought a few of the major systems were okay based on, and then plumbing's falling apart and fun stuff like that. But and I remember being upset about it and going, telling my wife, like, I'm having a hard time with this, just stressing out a little bit. And then the next day I made a clear decision in my mind to know I'm going to find a way to make this back immediately. Like, what deal do I need to do? What activity and action items do I need to do right now to make this back? And literally the next 2 days, I got a deal that I made $70,000 on like a wholesale flip for another multifamily that I did, and made it back. And at that point is when your mindset starts shifting, where you're saying, no, it's the faster you get from, holy crap, I'm stressed and I'm dealing with this, to focus on income, find a way to make it happen, and don't ever let that happen again. And what's the procedure to fix that so it doesn't happen? Now let's go through and focus on making this money back. You realize how fast that can shift your mindset. And when I think about that, I have that skill set now after taking multiple punches in the face and earning my stripes, for sure. My humbleness is like a whole nother level here, so, but when it comes to that, aspect, a lot of other people that are trading their money for time still at a job, it's what they want to do. And maybe they're happy, maybe they're not happy, and they're looking for a way out, but it takes them a lot longer to earn that money back. And so in my eyes, you're really taking away hours of their life if you lose that money that they've earned by taking their hours. And so if you look at it from that level of respect, it changes your whole perspective, because hours of your life is literally the most important thing there is, So, but anyways, like that, it changes you inherently when you go through something like that. And like I was saying, I don't think it was really a decision that I had to make at that time. It was there's no way I can't let my investors lose their money, like I just got to do this, like it was no question at the time, so maybe it was my dad and me that won't even let me like cheat on my taxes, that kind of thing. So
and I think, sometimes, you're probably either born with or raised with that sort of mentality, or you're not. Right? Like it's kind of there are certainly, unfortunately, unscrupulous people out there that maybe don't have that same level of character and respect for, and you put it perfectly, right? Like this is when people, when we're talking about like multifamily syndication, a lot of times a minimum investment is $50,000, right? That might be like a year's worth of salary for someone, or like that's a big chunk of money. They worked really hard to get to that, to be able to put into your syndication. Like, you damn well better put them first. Like you better be thinking about how I can, how can I make this work for them? And so I think that, and that will serve you. If you always come at it with that mentality, that will serve you because they're going to appreciate that. They're going to respect you for that. They're going to realize like, hey, this guy really cares about where I put my money, and in turn, they'll want to continue to invest with you. So it's a win all around.
I think that one of the biggest mistakes newer investors make when they're raising capital is not knowing how to do their homework right on the deal, so that way they can adequately protect their investors. So if they're too green, and a lot of people are just hungry, they're great. I'll raise money from friends, family, people that I care about, and other people that I don't know that may not have a full understanding of what you're actually doing, but they're investing with you out of trust for the most part. And like 90% of people invest with you out of trust, except for the 10% of investors that really know what they're doing, that are really going to vet the crap out of you and do what they should do, right? At the end of the day, when it comes down to it, if you don't know how to protect your investors' capital, you better go get that advice from someone who does, because like I said, that's trading their money and time right there for that time, and it's really an unfortunate thing, because a lot of people lose people's money just out of ignorance, or thinking, I got to get this deal, I'm hungry, let's go get it. And you're like, wait a minute, take that step back. If you don't know the legalities of raising capital, if you don't know all the due diligence on that deal to make sure every piece of paperwork and the deal's underwritten correctly and all that stuff, every way possible to protect them, then stop. Take a moment, go get outside advice from people that are way more experienced to you before you go raise that money, so that you don't put yourself in a position. Because in that case, when I lost the money and got my investors' money back, I had the resources to do it. And so I was able to. A lot of people just don't have the resources to do it. They are not able to. It doesn't make them bad people. They just can't, help investors. And so I think that's really crucial, is take that step back and get educated before you start raising money from other outside investors, because it's a big deal, So
yeah, absolutely. I wanted to talk a little bit about, you mentioned sort of how you like to diversify your portfolio, and you have your own investments, and then you're investing with other people in sounds like kind of almost everything, which I think is a great strategy. And people talk a lot about diversification, and sometimes that means that I invest in stocks, and I also invest in real estate, and I also invest in crypto. Sometimes it means I invest in multifamily, but in different markets with different operators. So diversification, I think, means, I don't know, something different to everyone. Your definition earlier of diversification almost maybe even seems more diversified than most people, even when they're saying that. First of all, when you're flipping, because you said you're in Southern California?
Yes, but I don't flip here at all. So I don't.
Okay, that's what I was going to ask. Are you doing any of your deals here in Southern California, or are you sort of doing that remote?
I do all of my deals out of state. I do zero business in California. The only reason I'm here is I have family here, and I don't really pay taxes because I know a lot of tax strategies. So right. To mitigate that risk. But yeah, I do these in other markets.
Okay. So yeah, you're not. That was one thing I was curious about, if you were sort of flipping locally, or you're doing this all over the place. Where do you focus? Do you have specific markets you like?
A lot of the Midwest markets. I invest in Memphis, St. Louis, Little Rock, Kansas City, Georgia, North Carolina, Texas. So probably 30 different states at this point that we're investing in, and have teams and things like that, and in these different markets around the country. So it takes time to develop these team members, and quality team members that are going to perform every time as well, of course. So, but yeah, we do this all over the country. It takes a little while to learn how to not get stolen from, but you learn, and then you get stolen from again and learn some more stuff, right. So
it's just a series of problems arising that you're focused on the solution to them. It makes sense.
Real estate is solving problems, right? So if you can't solve problems, like every day, there's at least 5 or 6 problems that come up that need to be solved in one way, shape, or form, from very minuscule to a bigger deal, and, changing focus and figuring it out, and sitting there and thinking about the problem for a while and how to solve it. Right. So, and if you can't solve problems, you have no business being in real estate, because that's the point of real estate in itself.
Yeah. I mean, that's exactly basically the definition of value add, right? You're solving whatever the problem is, whether that's a management problem or a structural problem, or whatever the problem is, you're figuring out a way to solve it, and then create value by doing that. So that's really the point. Right. So, on the note of diversification, so how do you, it seems like that's a lot of different things to, I guess, have enough knowledge in to feel comfortable in investing in all those different spaces. So is that something like you've developed over time and you sort of adding to the portfolio as you go in different areas, or you just know that much about everything, or you're sort of...
Yeah, I wish. Yeah. So at the end of the day, I started off just flipping and holding. Okay. Flipping properties and holding properties, primarily single family homes through fourplexes and things like that. And then started doing some multifamilies. And as I gained wealth over time by doing those strategies, those active strategies, I started investing passively in other opportunities and raising capital for those other opportunities and things like that across the board. And so I'll give you my idea of diversification across the board as it pertains to real estate in general. I typically don't invest very much in stocks. I put some money in gold and silver miners. I put some money on the side in gold and silver as an insurance policy, primarily for the collapse of the dollar that we all know is happening at this point, right? So a lot of this is knowing and understanding what's happening in the overall market. And plus, I don't want to be so heavily invested in real estate, which I am because I'm a specialist at this. So I think, was it Warren Buffett or something that said something about, if you're a specialist, you don't need to diversify or some crazy thing, right? Yeah, which is smart, but at the same time, also, he's diversified too, So, but once you get to a certain point, then you start to diversify your assets at that point. And so I think it's important for every investor to have these types of attributes, right? The insurance policies that I'm talking about in gold and silver and other miners and other value add commodities and things like that you may find valuable through your own research or, another broker's research that you trust and have vetted that broker. And I'm not talking Fidelity and Schwab's and those types of guys. I'm talking about really people that know their stuff, so, and not to put the dig out there, but, they know how all that works, right?
Sorry, Fidelity and Schwab guys.
Yeah. Sorry, guys. So, but you get my point as far as being able to put that insurance side aside, and then also investing in some active operational things, right? So these flips and these holds, they don't pay you right away. The flips take 6 months to get going or finished and sold and get your money back. And so if you have a cycle going, it could be a great income stream coming in to, get your income going, but you're doing volume there. It takes expenses to run that type of business. It's a whole nother business, flipping and holding, on that side, but you start to develop your cash flow slowly. I look at the property side of things as the holds as a very small piece of cash flow with some major equity build and major wealth formation over a long period of time, which is what those are. In the beginning, the projections, everything, you can cash flow at 6 to 10% plus sometimes, depending on the deal and the financing in place on the cash flow side of things, and then being able to go through and gain principal reduction and tax benefits and the appreciation of the asset. You've seen this obviously since the last 10 years, obviously the major run up in wealth associated with these types of assets. So investing some is in those types operationally, I think is important so that you can create additional income streams that are coming in. If you want to do that, you can always go sell education courses or do something else or keep a job, right? For your active income that's coming in over here. And then it comes down to, and that also helps build your portfolio so that you have enough cash to invest over here in a lot of the passive stuff where I invest in debt. So I get more consistent cash flow streams for investing in debt versus investing directly into properties in itself, which is more volatile, right? And so you can more predict that debt instrument. And it's usually short-term construction loans that I'm investing in, which is one of the reasons I got into that space, is because I can make cash flow spreads. I can make crazy returns. I did a deal inside my own 401k. There was a $500,000 loan that my 401k lent to a flipper at a 14% interest rate. Okay. It was 12% and a point every 6 months. And basically he used it for an entire year. So on my 500 grand, I made basically $70,000 on that deal. And my 401k then borrowed $450,000 at an 8% rate from one of my private investors. So my 50 grand left in the deal, I made a 68% return on my money. And so you start to see the strategies like that you can develop out of the note business, and it becomes really apparent. This is why all the super experienced guys go to the note business, quite a bit, Right. So And then, so we got the flipping and the active stuff over here on the flipping and holding, the note side of things for more consistent cash flow, and then the syndication side for more diversification and passive, because you can't just keep doing more active stuff unless you have, CEO level people that you're going to hire in place to do those things and manage those things as a true business where you can take that step back and be the business owner, which takes time to do and develop the skill set to do also, right? And so absolutely. I like investing in those passive opportunities because, like I said, you can take all types of different asset classes, from multifamily to mobile homes, self-storage, the marijuana deals, Bitcoin mining funds, ATM machine funds, all types of different stuff that you can put your capital into and develop these passive cash flow streams that you're really just getting quarterly reports. And yes, you want to review your reports. You want to do a lot of due diligence on the front end of these things and background checks on the operators and the team. Make sure you understand the financial assumptions. You're doing the borrower the operator due diligence, the property due diligence, and the structure and the deal due diligence on these syndications. But it's a great strategy because if you have $1 million, for example, all spread apart across $50,000 investments and tons of different syndications that are making you, 7 to 9 or 10% on your money, or 6 to 10% on your money consistently in cash flow, you're doing great from a diversification standpoint in that realm. But like I said, I think, and then we do the big multifamilies where we're getting bigger equity chunks by doing bigger projects and doing major value add. Our last deal was in Little Rock that we just converted a 15 unit into 18 units, and we were into it for about 2.2 million. It's worth about 3.6 now, all rented to traveling nurses and things like that, all furnished and brand new building, and we're holding it right now for the cash flow. And so these are the strategies that we developed over time to kind of look at these from a bucket standpoint on the strategies that you want to deploy and the types of education that you want to learn about those types of strategies, so that you can say, okay, I want to learn this about flipping and holding, and I want to learn this about multifamily, and this about notes, and this about the syndication side. So, and you can see it's primarily related around real estate, other than those syndications and things like that, and my insurance policies on the gold and silver and the miners and things like that on that side. And I get a lot of my information from some economics guys. After taking that punch in the face in 2008, I became an economics major then, even though I was already an economics major at Santa Barbara. I went to UC Santa Barbara and became an accountant because they didn't have architecture school there, and I didn't want to leave because there was too many girls. That was my train of thought at the time, and I was like, let me just become a CPA then. I'll do a accounting with an emphasis or an economics with emphasis in accounting major. It was like, okay, the things you think about when you're 18, right?
Right.
So,
right. Exactly when everyone should be deciding the fate of their lives at 18.
Yeah. So and that's where my mindset comes from when it comes to these different diversification angles. I don't really necessarily invest in stocks and bonds that much. I don't trust them. I feel like I don't have control over those assets like I do some of these other investments. Even in the syndication space, you're giving up that control to be properly diversified, which is great. I mean, you can say the same thing about stocks, except a lot of the brokerage houses make money whether you're making money or not, and take a big chunk of your money in fees, especially in mutual funds and those types of things, that it's hard for me to believe in that model anymore. You know what I mean?
Yeah, sure. Yeah. And I want to emphasize right here that anybody who listens to this episode, like you just took us to school, and understand, like, go back, listen to it, slow it down, and listen to everything you just threw out there, like, is effectively almost what everyone should be, what everyone's goal should be, right? So you said it, you have to have some active income stream. And if that's in real estate, great. If it's not, like, that's fine, like, have a job, but then you're working your way up to the level of diversification that you have now. And important to note, like, you didn't start this yesterday, right? Like, you started 2006. That's 16 years of, sort of building this, right, these businesses, building this portfolio. And so the ability to have those levels of diversification and things like it, it comes with time, and it will get easier and easier to then decide, yeah, I'm gonna put some money in this Bitcoin mining fund. I'm gonna, whatever it is, you can build all these things into your strategy and
Right.
create that diversification. But you started by flipping houses. You started by flipping a house, right? Like that's the beginning. And so, kind of what you've gained in knowledge over that time is remarkable. But like, I don't want people to listen and like get scared off because you have so much much knowledge that I want them to understand, like, everybody starts somewhere.
Right. And I think people limit themselves, hearing all this, and it took, 15 years for me to get to where I'm at, right, doing this full time, taking every punch in the face there is, and learning my lessons and going through all kinds of different, crap as a business owner, of course. And, right, you become very strong doing that. But at the same time, remember, you don't always have to go through every trial and tribulation as an operator like that. And you also don't ever have to limit yourself by your own capital. If you think about this, if you were to raise $10 million, which is a lot of money, but you were able to do $1 million a year for 10 years, and you were able to go through and implement that money and make a 2% spread on that money for private investor capital for helping his operations and things like that, that's $200,000 a year passive for the rest of your life, if that's the case, if you're able to do that, right? And so that replaces your job for most people, right? And so looking at it from that scale of things, don't ever limit yourself saying, damn, I got 50 grand or I got a couple $100,000. That's never going to get me there, as far as covering your monthly expenses with cash flow. But at the same time, realize I make money all the time off of other people's money consistently, just like I mentioned to you guys in the note deal inside my 401k. I was making $34,000 a year net out of $50,000 investment. And so if I did that times 3, I got, $150,000 a year that's, a big chunk of money times 4, I'm covered completely at over 100,000 a year in cash flow there, just from doing that alone with a couple of deals, right? So, $400,000 or $500,000 deals like that, where I got a couple $100,000. So realize over time, you can leverage other people's money and learn how to do this. You just got to go through the stripes on your own first, or with someone that's very experienced with capital and utilizing you as an operating partner to help with that transaction if you don't have that experience or the capital in place, or find another way to bring value to the table. Find the deal, find capital, work as an operator and managing the project as a whole, manage the managers, use your skill sets to help with that deal. And I have to tell you, the biggest and most important thing that everybody here could be doing to really increase their net worth is to immediately go network as much as possible. In the beginning, the first 2-3 years, I was going to 4 networking events a week for 2 years to 3 years, every single week, meeting new people. And not only that, but tracking them and putting them in a database to market to them and talk to them later and, do that type of stuff so that I could follow up with them, because nobody follows up either. So if you were to be the ones that do that, you will get a much higher conversion rate. And after like the 12th time of meeting somebody at the same networking event, they trust you implicitly, psychologically, whether they should or not is another thing. But, I'm just letting you guys know that like that strategy, I wish I was doing that in my early 20s before I quit my, CPA firm job, is networking more. I just didn't see the value in bringing business to a firm that I would get 1% a year off of, and, of the net income. It just didn't make a sense, So, but that's super important for your own wealth building, is that relationship development and resource development. And all you're doing, you're not going out there trying to get things for yourself. You're going out there talking to everybody, saying, what are your needs? What will help you in your business? Writing it down, taking a mental snapshot, and finding ways to help them with your other resources. So that's all you're doing. If you do that over and over again, you're helping. Just like what was it? Think and Grow Rich, where he was saying, do more service than you're paid for. Doing that initially in this business pays for itself 1,000-fold. So if you just go out and help people, the business will come to you automatically. Now deals just come to me. all the time. Like I don't even have to market at all anymore. They just come to me, and it's because I like to say it's mentally happening, but it's long-term relationships and slow, steady, doing what I say I was going to do all the time and just going out and helping people without expectation of anything in return,
Right.
So.
Right. And I mean, like those are, essentially good life skills to have in general, right? It just,
Right.
Sort of helping people and doing what you say you're going to do. And I think a lot of people think, oh, it's, it takes too long or whatever. I mean, 15 years really, like to lots of people will work in a job for 40 years.
Right.
Like that's normal. People will do that. They work 15 years to do what you've done and create the businesses that you've had and the kind of like you, as you said, like you could be completely passive if you wanted to and be fine, right? At this point, like you would be financially, you have that freedom. So it's just like, again, I really appreciate you sharing all this, because I think this is like huge, just steps that people can take, really little steps that can amount to a huge level of success. And
right.
Ultimately, like you said, forming relationships. And I think the other thing that's really important that isn't the case for most people, you as a CPA, that's different, but like understanding how money works, understanding that these things are available to you, understanding that you could do that deal in your 401k, and like anybody can do that.
Right. I think it's also, I didn't know how money really worked. Even after getting my CPA license, working at a CPA firm, I learned how to analyze people's financials and understand the inner workings of a business there. But at the end of the day, true financial education came after the fact, after taking that punch in the face and learning my lessons the hard way and realizing this is the right structure and I need to keep learning. And it really comes down to a never-ending desire to learn and get better and be a better person, be better at everything you possibly can. And, and also not beat yourself up when you can't do it sometimes, because everybody eats that Twinkie sometimes or that other thing they shouldn't be doing, it's just a matter of like, some people beat themselves up too much and then it stops them from moving forward. You got to be able to let that crap go and say, look, I'm stupid sometimes. I don't do the right thing sometimes, even though I know what I should be doing. I have my list of affirmations right here on my desk. Every day I read them and every day I do a quarter of them. So,
Right. Yeah. You have to be okay. You have to allow yourself mistakes. You have to allow yourself to not be perfect, to grow. Right. If it always has to be perfect, you'll never grow, because you'll stop when you're not perfect. You'll kind of give up on it. So,
and it's that slow, steady pressure forward. It's not going to get there overnight. It's a slow, steady, every day doing something, every day focusing on accomplishing one thing, and also really coming down to what is your real vision, right? And kind of the whole point of your podcast is what's your why and what's your vision. And when you realize, hey, what's my vision? There's a book called Vision Traction that goes over the vision traction organizer, which makes you break down, where do I want to be in 10 years? Okay, what do I need to do in 3 years to get to that point? And that 10-year goal, you're writing down, I want 100 houses producing me $100 a month or $500 a month in cash flow. I want X amount, detailing out the exact mental picture, and then saying, what do I need to do at the 3-year mark to get to that 10-year goal? What do I got to do in a year? What do I got to do in 6 months, 3 months, a quarter, that 1 month, and back down to the month and the day, to take action every day on that goal and focus on that specific goal, I think is probably the most important thing anybody can do. When you write it down, you're able to visualize it completely and be able to focus on it. And then it's that slow, steady, okay, I got these 5 things. Damn it, I didn't get that thing done. Let me put that on my plate today and push it forward, and consistently put that pressure, So
yeah, no, absolutely. And since you brought it up, let's shift gears here, and I'll get to the part where I get to ask you the questions I ask every guest. And the first one is, of course, based on the name of the show being Know Your Why. But what is your why, Matthew? What pushes you forward?
So I was sitting at my CPA firm, thinking that, hey, I got a good job, my ego, I'm a CPA, I got a college degree, none of that shit means anything at the end of the day. There's a lot of stupid CPAs and people that have college degrees that are morons,
Right,
So,
yeah.
at the end of the day, I was bored out of my mind going, this is not my personality. This is what the system groomed me to do, and, get a good job, go to college, all that stuff. And I was like, I can't do tax and audit anymore. This is the most boring thing to me, sitting there doing this repetitive crap every year, helping the government steal our money, and stuff like that. Well, really trying to help my clients not let the government steal their money, but filing it for them, So,
yeah.
And then I realized, I started reading Rich Dad Poor Dad, which is what the book changed my complete mindset, and realized, oh my God, if I don't make a change and start building assets and working towards building these assets that create passive cash flow for me over a period of time, I'm going to be a slave my entire life. I'm constantly going to be trading my time for money for the rest of my life. And do I want to do that until I'm 60, or do I want to have my freedom? Like last week, I worked from Joshua Tree and worked from camping out, which I didn't work a lot, I'll have to say, but I was on a lake up at American River, a river up in Sacramento area, the American River, and just hanging out with my kids, got a couple hours of work done, showed my son how to carve a knife out of a stick, and he's 6 years old, so sorry, I'm a bad parent, so but it's that you got to build the life you want, so that you can go, and I can travel anywhere now and work from anywhere I want. I closed my office 8 months before the whole pandemic happened, mostly to cut overhead and work from home and work from where I want, because I have a 6-year-old and a 3-year-old that I want to spend time with, and I don't want to be sitting there constantly, gone every day, because we were told when we were kids, and the whole system was go to work from 9 to 5 every single day, and you have to drive there and get there, and it's just a big waste of time, So, but anyways, so you get my point. That's the whole why, is like, if you don't do it, what's the consequence? Is you'll never have your freedom. And so you almost have to. And then once you start learning the strategies to do it, like that 68% deal that I just mentioned, like when you see that, you can get excited about that. And it helps a ton when you're like, okay, I got one piece of cash flow. I'm making $100 a month. Great. I'm going to pay my cell phone bill with that for the rest of my life, and focus on each little win one at a time till every single expense is covered, and do your mortgage or your rent last, of course, so that one's gone. Or if you really find a good deal, maybe you can kick that out in one multifamily. And really your only limitation is your own mindset. I got a buddy of mine that, it's an acquaintance, not full buddy. I've talked to him a few times, and he was in a mastermind group, but he bought a private island. He owns like 3,500 units. He bought a giant resort that basically he's doing masterminds out of and things like that. And it just is a constant reminder that, hey, maybe I'm not thinking big enough. I need to go after 500, 600 unit apartment deals and things like that, and focus on that realm, because the bang for your buck is more. And, it's just constantly being around those types of people and realizing that, hey, your mindset is the only thing stopping you across the board from achieving it immediately. There's a strategy to completely get financial freedom in one deal. You just got to think about how to do it and figure out what it is, So
yeah, it's true. 100% agree. 100% agree. I think it's that. Your mindset is the only thing holding you back, because it's
right.
It's obviously it's all possible because people are doing it.
Right.
People are doing it. People are reaching these levels of success and in whatever they want to. It's just, so it can be done. You just have to figure out how that works for you. So I love that. Second question, tell us something about yourself that isn't common knowledge, special skill, a hobby, I don't know, even something you want to learn that you're comfortable sharing.
Let's see. I'm a massive Kobe fan, and not an NBA fan, a Kobe fan specifically. I'm a big libertarian, which everybody probably knows because I hate the government, and it's all over online, of course. So, but all parties. And I love my kids. I want my full focus is on teaching my kids and trying to be able to show them the right ways of financial freedom and groom their mindset in the mindset that I never had growing up. My dad, was also a CPA, but worked, for a company doing that stuff. And he worked hard. He was amazing, but didn't have the, entrepreneur mindset that a lot of people have, where entrepreneurs can groom their kids to have that same type of freedom to and empower them to be able to do whatever they want to do across the board. And that's one thing I really love doing. And the last thing is that nobody's going to beat me at poker. So I'm a really good poker player, but
That's
so
good. That's
Texas
good.
Hold'em specifically.
Won't even try. I probably I couldn't beat anybody at poker, but no, so Kobe fan, but not basketball fan,
And
like just because of his mindset.
Yeah, I've had his basketball card on my desk for literally 15 years, because when shit gets hard in real estate or business or whatever it is, it's that Mamba mentality to come back and like, no, focus, drive, have that ferocity that will get you there. And when you're reminded of that at your low points, it gives you power, to be able to get through it. And like having those little reminders, sometimes everybody needs them, everybody needs that, of course. And that mentality, it meant a lot to me as far as like, hey, hustle and grind. And, the stories about him practicing before everybody else and showing up at 7 a.m. with, ice on his knees because he just practiced for 4 hours for the All-Star game, and stuff like that. Like just that mentality. Yeah. So
yeah, no, I get it. The funny thing, so I mean, I'm from Boston, so I can't be a Lakers fan, but I have become a Kobe fan because of that stuff like that. So and I lived in Los Angeles when he unfortunately passed away. So I was part of that. But yeah, I think just I'm always very interested in the mindset of these elite athletes and what they do. Like being from Boston, like huge Tom Brady fan, and he's the same thing. It's just like, what do you really need to do to achieve the success? Like, do you really want it? Because there's some sacrifices to be made if you do. So I think and Kobe and Brady and Michael Jordan, and like these guys, they do that. And I think they take it to that level.
I think one of the things that to really note about some of these people that do this on this level and have that level of drive and that level of commitment, you realize how it affects people around you and everyone else. Where, if I drive and I have this mentality and I go through and I'm, strong emotionally, even though I still have my weak points like everybody, and I'm that center of influence for my family, just like Kobe or Brady or anybody else on that kind of level. I'm nowhere near Kobe in real estate, but but not trying to compare the two at all. But
right.
But anyway, so
just goals, just
goals, yeah,
just goals.
So,
yeah.
But at the end of the day, you realize how they influence everybody. Like when Kobe passed away, the entire city, the entire world mourned because of it wasn't his basketball skill sets that did that. It was his drive, his mindset, and the kind of exposure to that he gave everybody, and the uplift that he gave everybody around him when he was on that kind of focus level, because that really permeates everybody else, and we're all just made of energy. So it spreads to everybody in your network when you have that energy in your life. So focusing on that is really one of the best ways to help other people, is to be the example you want to be, right? So, and realizing what that does every day for the people around you as far as your mindset goes, right? So,
yeah, 100% agree. Mathew, when people hear this and they want to reach out to you, what's the best way?
You can email me at invest@ocgproperties.com. That's the best way to get a hold of us. So we have lending and flipping and do all types of different stuff with investors. So if you want to talk about how we can help or different strategies we can help deploy, then reach out and, we'll help. If we can't help, we'll try to point you in the right direction of people who can. So
Perfect. And then final question for you. What piece of advice would you give to someone who is, getting started in real estate, trying to figure out, what avenue to pick, whatever it is, whatever you think would be beneficial to someone, kind of getting going?
I think it's a couple of things. The first thing is networking, like I was mentioning, because when you're networking, you find out all the ways other people make money, and it gives you ideas of what things stick out to you that you might be interested in or focused on. And then it comes down to a massive amount of education about those topics and going to every piece of education content you can find about those topics and learning. And then it comes down to, so the networking, the education, and then the doing, right? Actually going out. And if you have to work for free by managing someone's construction project so that you can go to Home Depot and Lowe's and all the other supplier companies yourself and pick out materials and know exactly what everything costs and learn every aspect of the operation of a renovation, then work for free to do that. It's the best education you'll ever have. Don't expect that, if you go to a contractor and say, I'll be at your project every single day to help you manage the construction of this and report to you exactly what's going on and help you go buy materials, all of this for free. I just want to learn. Not a single contractor that I know, unless you're just shady and you're not coming across right, is going to say no to you, if you're just like, this is my mindset. So that aspect of things, or working in someone's syndication, saying, do you need me to call investors? Do you need me to go and help you with operational management on this side? Put me in tasks and I'll do it all for free because I want to learn how to do this. If I earn my way in, then you pay me what I'm worth at that time, and don't worry about it. Maybe it'll be on a future deal or something like that once I show you what my skill sets are. Those are the things immediately that I would be doing from a beginning investor standpoint.
Yeah, that's perfect. That's perfect. Listen, this has been fantastic. I mean, I have learned a lot. I think this will be a great one for people to listen to multiple times. So people, when you hear this one, please leave a rating, like, subscribe, comment, all of that. I think this is going to be phenomenal. So thank you so much for coming on. Thank you for being a part of the show. I really appreciate it.
No problem. Thank you, man. Appreciate it.
Absolutely. All right. Well, we'll sign off. I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.